You're watching The Wave. I'm Frank Shi. Thailand is facing instability in politics and economy, and financial analysts warn that weak economic outlook might impact Thailand's banking sector, particularly in bond market. Joining me now is Rena Kwok, a senior credit analyst in Asian financials, Bloomberg Intelligence, to give me insights about Thai banks' asset performance this year amid uncertainties. Rena, thank you for your time.
Thanks for having me, Frank. It's good to be on the show.
Thank you. So, how do you analyze Thailand's banking sector performance in the second half of 2025? And you see, of course, on the ground right now, we see so much instability in politics and in economy too. What's your analysis?
Yes, Frank, I think you rightly pointed out. Amid this macro backdrop, I would say one word is really cautious resilience for the Thai banking sector. Now, just to give you some background how we see into second half for the Thai banks. Now, firstly, we do expect the profits might ease in 2025 this year due to weak loan growth as well as lower net interest margins as interest rate fall. On the loan side of things, it may actually stay muted as lenders operate high underwriting standards for riskier small businesses as well as retail loans, given the concerns about the bad debt amid the nation very sluggish economic recovery and high household debt situation. Now, in terms of asset quality, the Thai banking sector risk profile could actually be pressured despite the government support measures, given the banking sector pretty sizable stage 2 loans as well as continuing bad loan creation due to the ongoing risk that we see in the retail and small businesses. However, on some positive, the Thai banking sector very robust capital buffers, averaging at least Tier 1 capital ratio of 17%, as well as healthy provisioning, averaging about 174% as of first quarter 25. That could somewhat help to blunt this risk.
But you see, a lot of risks on the ground right now, and you already gave us some suggestion there. But I want to put it back to risks as what we have seen on the ground right now. So, of course, the global uncertainty, as you're talking about the rising cost. So how could Thai banks deal with actually bad loans or non-performing loans here this year? Because, of course, on the ground right now, there are some speculations about non-performing loans rising at this moment. So how can Thai banks deal with that?
Yes, so I do expect that Thai banks are likely to actually deploy what we call a multi-pronged defenses against the rising bad loans that we are expecting to see into second half as well. Firstly, proactive provisioning is key. We have seen some of the major Thai banks continue to make provisioning in the first quarter 25 and to bolster their balance sheets, as the risk from the indebted, low-income households as well as the struggling small businesses persists. Now, we also expect the lenders to continue to focus on targeted debt relief plans for the weaker borrowers, and that's in line with the government's push and support measures as well. And lastly, they are likely to tighten the underwriting standards for the riskier loan segments in the retail and the small businesses.
So, of course, I think in your report, the Bloomberg Intelligence report, also drag, I think, put two focuses on two banks here of Thailand. One is Kasikorn Bank. So, according to your report, there are some uncertainties and risks, I would say, for Kasikorn Bank here. So, why is Kasikorn Bank more at risk than other Thai banks in terms of loan problems in coming months?
Yes, so I think it makes sense to first take a step back and understand the business mix of Kasikorn Bank. Now, if we take a look at Kasikorn Bank, it has a riskier loan mix of about 54% to small businesses and retail loans, and a very sizable, I would say about 9% of stage 2 loans as of first quarter 25. And that could actually pose greater asset quality headwinds as compared to some of its local major peers. Now, its above peers elevated credit costs may stay high this year and exceeds its management guidance of 2025 of 140 to 160 bits. Just to give you the context, in first quarter, Kasikorn Bank credit cost has already reached 160 bits, and this could possibly climb to our expectations of 170 bits for 2025 as the tariff and political uncertainties actually hammers Thailand's weak post-pandemic recovery. However, on some positive, Kasikorn Bank 160% provision coverage in first quarter could partially help to cushion some of the credit losses, and its asset management joint ventures such as Arun and JK Asset Management Company might also partly help to accelerate bad loan resolution.
Is that credit losses to a dangerous level for Kasikorn Bank? Do you think so?
Sure. I think, if we look at the impact of potential defaults for Kasikorn Bank balance
Hmm.
sheet, it will be actually modest because Kasikorn Bank has also first thing they started showing up provisioning over the years to cushion against potential macro headwinds.
Hmm.
Secondly, I think Kasikorn Bank has also tightened its underwriting standards over the years, but of course, given its riskier loan mix, it could actually face greater asset quality headwinds as compared to some of its peers in this rising macro headwinds. Now, I think another plus point is that the setup of what we call the asset management companies could actually partly help to accelerate bad loan resolution for Kasikorn Bank as well. So I would
Hmm.
say the impact of defaults for Kasikorn Bank balance sheet could be manageable.
Another bank in your report, Bloomberg Intelligence report, is Bangkok Bank. So I think Bangkok Bank this time has better performance than other banks in Thailand. So how well is Bangkok Bank expected to handle asset quality this year?
Yes, I think Bangkok Bank is a different story, right? And the reason
Mm,
why we think the bank's asset quality could actually remain stronger than rest of its Thai peers is because it's supported by its very corporate heavy loan mix, very prudent risk control over this credit cycles, as well as strong risk provisioning. Now, despite Bangkok's bank gross non-performing loan ratio rose actually quite slightly to
mm,
3% in first quarter from about 2.7% in fourth quarter 24. That was partly due to the Thai Airways debt to equity conversion.
yeah.
However, the non-performing loan formation appears to have stabilized for Bangkok Bank, and it has really high 300 provision coverage in the first quarter that offers strong
Mm.
protection and could enable lower credit costs this year.
Among these risks or performance, asset performance that you just talked about, of course, this is one of the risks for these banks to handle their asset performance. I want to ask one question for our audience. So, of course, we talk about non-performing loan, bad loan. What does that mean for people on the ground, or when they watch this video, they want to know that, of course, non-performing loans rising or other banks, they perform well. What's the key message to them, to people on the ground? Is there any risk for them too?
Yes, I think as we approach this question, we have to look in different groups of people, right? Of course,
Mm,
if we look into the institutional investors trying to understand the Thai bank's balance sheet, then
yeah,
this whole video gives you, good insights how we see the Thai bank's asset quality going
yeah.
into second half and which lender could be better placed than some other peers against this macro backdrop. Now,
Mm,
for the ordinary, people on the ground like you and I, what does this mean as we, look into this rising macro headwinds, Thai banks, tightening their underwriting standard, we might actually have to see when interest rates are cut by the Bank of Thailand. Could
yeah.
some of this rate cuts transmitted to the loans that we might need as borrower, as well as
Mm,
lenders underwrite their standards to be stricter? What does it mean for the weaker borrowers who couldn't get access to the credit they need to tie over this period? So that will have different repercussions on different borrower groups, I see.
yeah, to your point, of course, for institutional investors, they will see how stable the financial market and the banking sector are in one country, and for people, retail person or people on the ground, we might see that really might affect us, depends on the interest rate too. So given that you talk about Thai central bank here, as in Thailand's economic outlook is not that good. According to World Bank's report, the GDP growth will just go under 2% this year. And of course, tourism is still slowing down at this moment. So some analysts in Thailand, they push the central bank to lower the interest rate to 25 basis point to 1.5%. What's your thoughts?
Yes, I think, the Thai Central Bank is also in a very tricky position, right?
Mm,
On one hand, it faces the challenge of bolstering the Thailand's economy amid the rising macro headwinds that we have been discussing on as well. And on the other hand, trying to be cognizant of the elevated household debt situation that we have locally. Now, with household spending slumping and as well as the front-loading boost to exports set to
mm.
fade into second half, the expected interest rate cuts by the Bank of Thailand may be warranted to actually bolster the nation growth, in my opinion.
Right. Of course, I think right now it's still in the transition for the election of central bank's governor at this moment. Of course, we still have the monetary policy committee in central bank to take care of that interest rate cut at this moment. But right now, of course, in the latest meeting, they still decided to maintain that 1.75% of interest rate. So people still watching for that, and of course, analysts still pushing for that too. Last question I want to talk about is you monitor Thailand's banks' asset performance this year until the end of this year too. Have you seen any Thai banks in this sphere? Which lender are set to post lower credit in 2025? Which is the better performance at this moment?
Yes, I think that's really answering the million-dollar question, right? Among the
Yeah.
major Thai banks, which lender could actually set to post lower credit costs than peers in 2025? Now, if I look into the major Thai banks, right now, Bangkok
Mm,
Bank as well as Kun Thai Bank are set to post lower credit costs in 2025, outperforming major peers like Siam Commercial Bank and Kasikorn Bank, and below our forecasted sector average of credit costs. Now, we forecast for Thai banking sector's credit cost to be about 1.3 to 1.5% this year. And,
mm,
as I highlighted earlier, now Bangkok's bank corporate-led loan mix supports its peer-leading asset quality outlook, while Krung Thai Bank, very small business loans exposure, as well as its sizable retail loans that are mainly
mm.
granted to mostly stable government workers could help to also bolster its strong asset quality, keeping credit costs low at about 1 to 1.2% in this year.
Right. Follow-up question, very briefly. Just want to get like 20 seconds from you. So just want to understand, of course, you also monitor Asian financials too. Do you think Thailand's banking sector at this moment is healthy enough compared to other ASEAN peers here?
Yes, I think how we look into firstly, how Thailand fits into the broader ASEAN region of banks. Now,
Mm,
as a whole, the ASEAN banking sector, the major banking sectors in ASEAN could remain resilient despite, the increase in macro headwinds that we see related to the tariff uncertainties, because
mm,
most of the major banks in ASEAN have actually ample provisioning or, capital ratios, as well as, good risk buffers to actually cushion against what we call likely the modest asset quality headwinds in this backdrop. Now, how
mm,
Thailand actually fits into its regional peers is this. We do expect Thailand banking sector to face actually greater asset quality headwinds as compared
mm,
to some of its neighboring peers like Singapore or even Malaysia, because of the challenging operating environment that Thai banks are in. Right, we have the structural challenges in small businesses. We have the high household debt situation locally. We also have this very nascent economic recovery in the nation. Now, all these
mm.
macro headwinds are set to pressure the Thai banks' operating environment more so than some of the regional peers. However, I do mention earlier that at least on the broader sector basis, the major Thai banks actually have healthy provisioning as well as capital cushions to somewhat blunt the streets, which is why we think actually Thai banking sector, as I start off in today's interview on the banking sector, to say is cautious resilience into second half.
Right. Thank you for your time. It's a very good analysis, no matter it's on Thailand's banks' asset performance. And of course, right now, any uncertainties how Thailand banks can perform in a way to grow positively. So today, Rena Kwok, Senior Credit Analyst in Asian Financials, Bloomberg Intelligence. Thank you for your time.
Thank you for having me. Take care.
More news to come.